my friend. So this is the inventor of the crypto hedge fund. He started off at customer service at Coinbase and leveled all the way up. And Olaf and I have known each other for 12 plus years at this point, right? So let's talk network states. Let's talk startup societies. You've got a thesis. Go.
Yeah. So I'm coming at this particularly from an investment perspective and a cryptocurrency mechanism design perspective. So when I look at network states, startup societies, I think we've been in the pre-Bitcoin era. So if you follow kind of the history of cryptocurrency, before Bitcoin even, there was like eCash, Hashcash, BitGold, Liberty Reserve. There were all these kind of prototype attempts at a system like Bitcoin. They were all directionally correct, but missing those kind of key components that made it happen. I think we're at that tipping point where we're moving from the pre-Bitcoin sort of startup society ecosystem to, really Bitcoin, basically. And I think there's one really key tailwind that's a very dramatic statistic that people sort of miss. That's my main answer to kind of why now. And it's the difference between internet native, sort of internet connected kids from birth from 1995 to 2010. So if you're born in 1995 versus born in 2010, the number of kids that grew up with an internet connection grew in that one generation, 15 years apart, by 150 times. So it's like hard to overstate how dramatically different this kind of new generation is. They grew up connected to the internet.
Genuinely internet first.
Yes.
Right? Like an increase of 100x in 20-something years that's why everything has to be thought of internet first. One of my theses on this is related to this, which is lots of 20th century ideologies were premised implicitly on the fact that people went to work at the assembly line. And outside of China, that actually isn't that common in the English-speaking world, right? And so every ideology today has to start not on the assembly line, but on the smartphone. And if it doesn't start with clicking buttons and so on and so forth, it is some kind of relic of the 20th century that doesn't really extend to the present day.
Yeah, and I think that people, obviously with so many more people on the internet, people are organizing themselves increasingly via online networks instead of geography. So things like fiat money and fiat money system is a geographic system. Various systems of regulatory frameworks are all geographic.
They're all nation state
organized
locked. Yeah,
for online businesses. So it's very odd, obviously, because you're agnostic usually to where your users are logging in from, yet you're sort of beholden to rules that were based on, trading like cows for wheat and things like that. So I think that the shift towards an online native young population is answering the question for sort of why now. And I think we have these historical precedents. Everyone here, I'm sure, has been told a million times these stories of the growth of Dubai and the growth of Singapore.
Well, I mean, yeah, maybe tell us.
Yes, I mean, the short version of this is over the last, not even just maybe 1-2 generations, these two regions have gone from, places that, for lack of a better term, are a bit the middle of nowhere. They did not have access to a lot of natural resources. There was no particular reason that you would expect them to be high-growth economies, but they opened themselves up to globalization, to free trade, and kind of made themselves a good place to live and a good place to do business. And just off of that merit, they've been the highest-growth economies over the last few decades. So it's kind of proof that this model has such significant demand that even if you're in a desert without natural resources, you can still be the highest growth economy in the world. The difference is now we have the internet and we have the kind of ideas of incentive design and mechanism design from cryptocurrency, so we can actually scale this significantly faster. So we're basically speed running the story of Dubai and Singapore, because they didn't have the internet and they didn't have cryptocurrency.
And that was already fast.
Yes.
That was
it was
6
already
years.
fast, exactly.
So maybe we can do it in 10 or 15 years, right?
Yes.
And actually, I mean, if you think about it, it's funny because I'll say something like this, which is people sort of understand intellectually the scale of WhatsApp, YouTube, WeChat, TikTok. These are like billion-person apps that were basically developed in the last 20 years. And what a billion people is this mind-crushing number. Like 100,000 people packs the stadium. And what if those groups were to organize and materialize physically? That would change the world, right? And that's what is possible over the next 10, 20 years.
Yes, and I think that like it's hard to comprehend, again, these numbers, like the growth, going up by 150 times. For example, I think one big generational shift, I still remember one of the early hires I made at Polychain was a Stanford freshman. His name's Karthik. He dropped out to join Polychain. And I remember I was talking to him about how much something cost. And he looked up and said, oh, so that's like 80 Ether? And it's like he had to convert dollars to his native currency from a long time ago. And I feel like there's this kind of youth generation today that really views the internet as home, right? And as kind of their native place. And they view cryptocurrency often as sort of their native unit of account. And they have to sort of go translate back to that. And it's something that
I think for sure, you might argue ETH, but for sure Bitcoin is something where CoinMarketCap, people denominate portfolio returns in Bitcoin. That's actually really become the, quote, I shouldn't say risk-free rate of return because everything has risk, but the equivalent of that as a benchmark for our space, right, is like Bitcoin return, right? So, internet first is interesting because, as you mentioned, regulations are geo-locked. It's like a locked DVD, It's like region-locked for no reason, or no good reason, arguably. Because as you travel, suddenly the electronics stop functioning, right? Imagine if your Gmail was region-locked.
Yes.
But your postal service is.
Yeah.
Right?
Yeah.
And so, so you had one, which is the pre-Bitcoin era. You had two, the 156, and you had the third point.
Yes, and so I think there's a few other just macro tailwinds to the answer of why now and why we're shifting from BitGold to Bitcoin in terms of sort of era. And this is especially pertinent from an investor perspective. I think the opportunity is now. It's the ascent of Asia. We're moving towards a less, Western denominated world. So if you look at global trade settlements and what currency they're denominated in, we reached a peak of, something 80-90% denominated in USD a very long time ago.
Right.
And it's now declined and it's now under 50%. But I also don't think that means the Chinese yuan is replacing that. It's really just becoming very decentralized, and in a sense, there's less of a central economy that's sort of everyone's responding to. And so in that sort of gap, and in that more global patchwork economy, I think there's actually more opportunity for a internet native state to grow very aggressively, relative even to the backdrop we've seen with, say, Dubai and Singapore.
Yeah, I think that's right. And I think actually this whole space, I've talked about this with Ben Horowitz and with Brian, but I think of this as the third kind of thing, like internet companies, internet currencies, internet communities. So in our last few minutes, Olaf, what kind of community would Olaf found?
Yes, I mean, one thing that I do find when I'm telling people about the network school is, and this makes me very bullish on the concept, is that it's very hard to use comparative metaphors to sort of just say, well, imagine if you had Stanford, but it was just starting, or imagine you had a new cryptocurrency system that was based on geography, or the reality is it's this intersection of a very large Venn diagram of a lot of different concepts. It's kind of this secret third thing, right? And it's in a similar manner that Polychain sort of defined a new category of crypto funds. The network school is really defining this new category, and is sort of the first in the category. Because of that, it's a bit hard to explain because you can't. But this is what makes me excited about it as an investor. So if my system, I think, maybe is more aesthetically based. That's
vibes. Vibes are multivariate.
Yes, exactly. And I would rather have a bad hotel room with a really great soundtrack. You know what I mean? That's me. So if I was designing my kind of network state, I think that's how I would do it.
Yeah, I think editability is more important than luxury, especially at the beginning, because like a startup doesn't have all the perks, but that's why it's not Google, it's a startup. It's a pirate ship, right? And I think we can build, not necessarily pirate ships, but certainly startup communities. So, all right, thank you very much, Olaf.
Yeah. Well, thanks, Balaji.
Yeah.
Yeah.
Okay.